So the Indian rupee had fallen the last year as well. In the entire of 2025, the rupee fell from $1 equal to 85 rupees to $1 becoming 90 rupees. But that was not enough. What we are seeing in the last couple of months is that rupee is falling by a faster pace now. Yes, so from $1 equal to 90 rupees, rupee has breached $1 equal to 95 and gone below that as well. So we can clearly see that there is a fast depreciation of the rupee, and the RBI is trying to control this fall. So let us understand in this video as to why the rupee is falling, and to ensure that the rupee do not fall, what is the thing that we should do? Why is it that the global market will matter more than the domestic policies that the government can take up? We'll also see what the RBI is doing to stop or at least try to manage or control the depreciation, and we will see what are the days or how are the days ahead in front of us. So let's get started with this lecture. So let's understand what the news is all about. So the news is about the weakening of the Indian rupee, and that too a sharp weakening of the Indian rupee. Now, what is the major reason for that? See, the rupee would fall against foreign exchange of other foreign currencies based upon the demand and supply of the various currencies against Indian rupees. Now, this has significantly, the depreciation has significantly increased since the US-Israel attack on Iran. Since that war started, what has happened is the Indian rupee has seen a depreciation. Why? Because that particular conflict led to the rising crude oil prices. And as you know, the majority of the trade in the world, specifically in the crude oil, is done in dollars. So the demand for dollar increases against the rupee. So dollar will become more powerful and the other currencies will start to depreciate, which includes the Indian rupee. Then there is higher US bond yields. What are bonds? Bonds are debt instruments. You can invest in those debt instruments. So the return that you are getting from US bonds has now increased. That is what is known as the yield. Since the yield has increased, the dollars from India is flying abroad and going into USA, which again increases the demand of the dollar and reduces the dollar that we are having with us. Clear? Then the global capital flight towards safer asset. What is this? The dollars and in fact the foreign exchange of the world are trying to invest themselves into safer assets. That is why the demand for the dollar increases against every other currency, including the Indian rupees. Right? Now, let's understand the global currency stress across Asia. As I said, the demand for dollar is increasing against other currencies as well, which includes India, specifically the South Asian. It is the Asian currency that are taking a hit, as you can see it over here. It's only China, Malaysia and Singapore that are doing better, but then you start Hong Kong, depreciation, Taiwan, depreciation, Japan, technologically advanced country, depreciation, Thailand, South Korea, Philippines, Indonesia, and then India, a depreciation of 6.54% in just few months. Now, why is this? Because the Strait of Hormuz got closed, and India nearly imports 80% of oil that India imports. 80% of it is shipped through the Strait of Hormuz. So the oil importing countries are facing increased import bills, right? Now, the oil shocks and India's vulnerability because of the increased price of crude oil and the closing of the Strait of Hormuz. What is happening is India is becoming more and more vulnerable. Why? Because India, we import majority of our crude oil requirement. As a result of which, what is happening is our import bill is increasing. Because our import bill is increasing, what is also happening is our current account deficit is increasing. What is current account deficit? Basically, there is a concept of current accounts balance. So we basically export goods and services. So we export goods and services. and we import goods and services, right? So our exports of goods and services combined is less than our imports of goods and services. That means we earn less dollar than the dollars that we spend, as a result of which we are in deficit, and that deficit is known as the current account deficit, right? So when our import bills are increasing, so our import value is increasing, the export value is not increasing as such, as a result of which there will be increase in the deficit. So which you can clearly see, India's merchandise trade deficit is $28.38 billion as of April. One thing that you should remember is, with respect to the export of services, we have higher export of services as compared to import of services. But why our current account balance is in deficit? Because our export of goods is way lesser than the import of, sorry, yes, than the import of goods, So here we are creating a deficit, here we are creating the surplus. This deficit is higher than the surplus. That is why when you take a net, we are in a net deficit. I hope that is clear, right? Let's move ahead. Let's understand the global dollar problem. So this problem is being faced throughout the world. What is happening is rising US Treasury yields. So treasury bonds that are there, they give you a return, and that return is known as the yield. That return is known as the yield. So the US's 10-year treasury yield, it's highest in more than 1 year. It is increasing, it has increased. Right, now because of this, the money from the rest of the world, including from India, is going to fly over to the United States of America, thus making the dollar even more powerful. Now because of this, the emerging markets are taking a hit because of the higher US yields, and India is one of the emerging markets. Clear? Let's move ahead. Let us now see what the RBI is doing to resolve this. So RBI wants to ensure that the depreciation does not happen much. So RBI is flooding the market with the dollars and buying Indian rupees with that. So when RBI flood the market with the dollars, what is going to happen? More supply of dollars, dollars value will go down. You suck out the rupees. So less rupee in the market, demand remaining constant, value of rupee will go up. Value of rupee going up, value of dollar going down. So the depreciation will be reduced or stopped or maybe reversed. But the depreciation is so fast that even so such high open market operation of RBI is still not able to cut the depreciation of the Indian rupee. Our foreign exchange reserve actually crossed $700 billion. Not just that, in the month of February, it went beyond $720 billion. But RBI, $726 billion. But RBI has done open market operation, has sold the dollars, have dumped the dollars. Around $36 billion in the market has been dumped. So right now we have around $690 billion of foreign exchange. Of course, these fluctuations are there, but this change has taken place in a very short period of time, and this is not sustainable. So as a result of which, we need to find out a solution for that. Right. So what can be the solution for this? The solution cannot be that we keep on pumping in dollars. You can see RBI reportedly spending nearly $1 billion per day. So if it has been around 38 days, 36 to 38 billion dollars have been pumped in. So what we should do? We should try to find out substitutes for our imports that are there. We need to diversify our sources of things, both for imports and exports. We should try to increase our exports in order to earn the dollars, pounds, and the foreign exchange that are there, right? So these are the things we need to do, right? So these interventions will have sustainability rather than this, which is not a sustainable thing. So if we do these things, our reserves will be maintained at an adequate level. Our reserves are presently good, but we cannot come in a situation where we are doing terrible and then try to look for solution. We should look for solution beforehand only. When the things are good, then only, right? So in fact, it is said that around 6 months worth of import money is what you should have. Our $700 billion is enough for us for 11 months. So the buffer is quite good, but we cannot keep on eroding that buffer, as a result of which these other things also are required to be done. Thank you.